Welcome, everyone, to the Dips to Rips podcast. It is I, Charles Moon, the disciple of trend, with my co-host, Crypto Hondo, the sexiest man alive, Howard Greenberg. Him and his crypto crew running it.
What's up,
guys,
buddy?
we just wrapped up the FOMC, right?
Yeah.
A bit of a muted reaction, you would say.
Yeah, I mean, I don't really understand why. I mean, I thought he was less hawkish than the month prior. 2 out of the 3 ain't bad, right? Isn't that what the song told us at one point?
Yeah.
I mean, CPI inflation was good. GDP was nah, but that jobs, dang, man. I mean, he wants everybody fired. He sounds like, he just is hell-bent on the fact that, and I get it, that is not turned around yet at all. So
I feel like in all actuality, what ended up happening was that there was some reigning disappointment by traders because they were projecting that there would be a rate drop at the end of the year of 2023. But let me just quickly state that it's not like the Fed was guiding towards that. This was just natural assumptions.
No, absolutely. That is the key point, is that they had not said that, but you had people reading into things a little too much, in my opinion. And that's what I think happened with this whole thing. I mean, I'm with you. I remember in the coaches chat, Scott thought we were going to rock and roll. I thought we were going to rock and roll. It looked like it was starting to. I was surprised. I thought we were going to do the opposite. I actually thought we would fade during the morning and then pop on JPOW. What we've seen, right? Yeah. Like 3 out of the last 4 or 4 out of the last 5 times they've risen rates, we've gotten hit with that initial, fake out to the south, and then we've rallied. I think you put up the charts for us earlier.
Gru Gavin, an influencer, he's basically an informative mouthpiece for traders in the Twitter sphere, pointed out that every FOMC meeting besides the last one, the market had dipped and then rallied back, right? Yeah. And we certainly dipped. We didn't really rally that big. I mean, there was a pretty decent move in the SPY. I mean, we did pop pretty aggressively. We definitely finished off our peak levels around 405s in the SPY. We kind of reversed. We were somewhere around like 397s, ran up to 3 or 404s, and then kind of reversed back as well. So, things got awfully quiet in a sense. It was really non-directional overall after the initial reaction. If we kind of temper to where we finished, well, the initial move down, then the move back up, and we kind of just fit in the middle. And now the market is back to, well, do we have to look at and constantly watch the CPI still, or do we now have to incorporate the one thing he kind of quashed was looking at unemployment rate a bit, because he says that it was kind of
wages. And I got that,
wages was a big one.
Out of his last one. I got that out of his last one, that he made it clear wage growth year over year is growing 10, 11%, then inflation isn't going to get tamed. So I do think that for sure is, that had already been my takeaway. Yeah, I don't think unemployment is the problem there.
Well, I guess the question is, because clearly none of the markets liked it. The question now is, what is the market going to do? And I got to tell you something. I don't know what they're going to do. Listen, this is, I want you to register this, okay?
So for us, I got a little bit more, sort of not insight, but, if you look, we've leveled off, like you said, we're going sort of sideways. We were going up slightly, but what we're seeing is, any kind of, you're seeing sell off into any kind of strength. And for us, volume just dropped way off. You know what I mean? Is that all the volume got wiped out between 2 and 3. And then we had, it's just wiped right out.
Yeah, I mean, volume was okay for the stock markets. I'll tell you this, it's just a weird finish, right? Dow finished down 0.5%. NASDAQ finished down 0.75%. So 142.85. S&P down 0.6%, down 24 points. Russell finished down 0.65%. And the VIX finished down 6.25%. VIX futures down 5.25%. You know, it's just a weird fixture that we saw the US dollar dropping. We saw the 10-year rising, TLT, which represents the 20-year, starting to make a move, and they're getting bullish. And generally speaking, that's a positive for the markets. And I guess the markets started moving sympathetically, but not to the tune of how they had moved, not in terms of the range that they reacted and moved up to, and where we ended up finishing down at. I mean, VIX, well, it wasn't a small spill. VIX spiked up to 23.5 or thereabouts. What was the high here in VIX? 23.47, and it rolled straight down to 21.07. The entire day move was basically multiplied by 2 in a negative light on VIX, and the market barely started rising up here. And you know, we're seeing this voluminous move in the VIX and not really seeing it reflect in the market. So I think the market's a bit confused in a sense, or not sure how to position themselves. There's also another dynamic, Howard, right? Which is quad witching at the end of this week. So maybe this was a liquidity dump, right? Cheap premium. I don't know, man. It's just a weird temperament.
Right. I mean, and now what we're going to see, right, is that we'll see, you know, what worries me is we're going to see Fed talker after Fed talker, right? Because they'll be off of their blackout period. They like to do more than to step on the throats of the market, it seems like, over the last few months. My other takeaway, Charlie, I don't know if you had seen that at all. I had seen a couple of things after the last FOMC meeting that said it took a lot out of Powell to get all of them, even the most dovish, to back his, you know, unanimous vote for the last 0.75. And it made it sound that he was going to probably have some descendants, especially Esther there. But there wasn't. It was unanimous again. So I was a little surprised to see that. I wonder if maybe that surprised some people in the market. You know, I don't know. I guess maybe, you know, I'm looking for some answers to, you know, what the reaction is, like everybody else. And that was the only thing that sort of hit me. I was like, well, you know, I remember in a lot of the dialogue afterwards, especially like on Bloomberg and some of the other, you know, news agencies, was talking about that Powell really used the end of his chit, so to speak, to, you know, get everybody on board to be unanimous. But they were unanimous today. That was one of the first things I looked for when they did the release.
Yeah, they generally are very united in their front. So, you know, it's almost like when a jury goes to trial, they kind of talk it out and come to this conclusion. But I think the process of what is expected is taking place, right? If we're getting to that median around that 5%, which is expected, right? Members have been talking about 5 to 5.5%, holding at these levels until data tells them to start cutting rates. You know, that's part of the thing here too. It's not like the FOMC was guiding towards the fact that we're going to lower rates anytime soon. They're really staying in line with their tune, and what they've widely been saying, and it's been on from the most hawkish to the most dovish in a sense, is that they are going to be slowing down these rate hikes, that they are going to work it towards 5 to 5%. We'll see which number is really going to be the case here. And they're going to hold it for some time, and then they'll see. There's nothing preemptive. There's nothing pre-planned. And I think in relation as well, Howard, maybe the markets want a little bit more structure and guidance and context. But when we look at the dot plot median is pretty evident at 5.1. There were some at that 5.25, 5.5. But it's afterwards, right? It's 2023, 2024 that was extreme in the sense that there was a lot of dissent. There was a lot of difference in opinion. So I guess maybe it's a combination of the disappointment that the Fed didn't guide that they're going to lower rates. There was disappointment in the fact that there was a big confusion in the dot plot. there was concerns that the PCE percentage was risen from 3.1 to 3.5%. And, we all said this. It seemed like Powell didn't want to be up there today, right?
No, man. Like I said, I think they beat the living what out of him in that meeting today to get to unanimous. You know what I mean? I guess that's part of what my takeaway was with that too, is because exactly, we sat there like, man, he just does not, he's usually a pretty animated speaker. And it was about as monotone as it gets. And then he basically called people stupid. I mean, literally it was like, people just aren't listening to us. We haven't changed our tune, so to speak. So I thought that was different. Like I said, it's.
I put my bull hat on for a reason. Like I had this hat on for a reason today. I really thought that Jerome Powell was going to send us off, and it certainly didn't.
I mean, we're the same boat there, I think. I definitely did. I definitely did. I thought it was going to be a takeoff. I've been messaging back and forth with you, right? The levels, it looked like it. We hit the first two triggers. Bitcoin moved up through 18,150, moved up 18,400. I said, okay, we could go 18,650 here. And if we do, we hit 19. And it just turned around. What we did say is what I did tell everybody in our room earlier was that our downside was fairly limited in the fact that there was a lot of support below us. It was, what it was is I think I got enamored personally. There was a lot of upside potential and a lot of support to the downside. Mm-hmm. So I think I allowed myself to get a little bit lulled into, okay, man, let's get to that upside, because we hit that. We're going to just get to that next level and erase the FTX, the whole thing.
Well, someone's going to start thumping on Twitter that this is all a scam anyways. This was, they purposely tried to prop it up and then they dumped it on everybody. Listen, guys, I'm going to say something here. The markets are going to market, and they're going to continue to market. And again, it wouldn't surprise me if we're up 4% tomorrow. I think the disappointment was that it wasn't exactly today. We could also be down 4% tomorrow. Like I said, this is now a situation where we're still kind of having to live and die by, maybe what the bonds are going to do, what the fears of economic data and concerns in that effect. What data should we look at tomorrow? Probably let's see what comes out. Business inventory numbers tomorrow is going to be out there. Retail sales is going to be out there. Philly Fed manufacturing. Tomorrow we do have the BOE announcement in minutes, and ECB announcement as well.
Tomorrow you have ECB, you have Taiwan, you have the Philippines. I forget, I was looking at that. There's a huge amount of
Philippines.
For crypto, man, for crypto, that's huge.
Yeah.
Philippines, you're talking one of the major spots, for crypto.
Well, we have a PMI composite flash on Friday too, so the market's going to react violent. I mean, Friday is quad witching. I
can't believe you went off the Philippines, by the way, man. That's wrong.
Listen, for those that don't know what quad witching is, that is option expiry, but it's the big one. It's where it is the weekly, monthly, quarterly, and futures options all coming to an expiration on the same date. It happens 4 times a year.
4 times a year. That's why it's quad witching.
Yeah. So I don't want to veer too far off of FOMC, because that's certainly going to be dynamic, and Jay Powell is Jay Powell. But
I have a question for you, Charlie. Scott sort of brought it up by showing us a chart that showed the 3-day movement in the following the FOMC. And I brought up that our good friend Big Beat from money.net, he always talked to me over the years about the 1.5 day rule with the FOMC, that it really takes the market a day to a day and a half to really digest, and you see reaction one way or the other. But, if you want to get a head start, is if you spend your time doing your analysis now, you might be ahead of the market, maybe.
Perhaps, the recent history especially has been that, we'll be very contrarian the following day. Right. But a bit of that dynamic has changed, right? It's usually because the market makes a big move on, whether it's to the upside or downside on these FOMC announcement days and Jerome Powell speaking. And then we usually tend to see that reversal, come on back. I think Scott had pointed out FOMC point change. The last time in November, we we dropped 96 points in the SPX, 2.5%. And then the market closed way down another 85 points, 3-point change.
3 days later, yeah.
Yeah. And again, if you look, the data itself has been fairly sporadic. The 2020 surprises me to an extent on how many days we've seen negative fall off from them. But, if you look at through 2021 and beyond, it really starts to balance out. So it would be, it kind of looks like
almost a 5%. It's been about a 5% change over the 3 days.
Yeah, you know what it kind of looks like if you ever go to a casino and look at the roulette table and
trying to figure out what's what. Yeah.
Yeah. So hold on. I'm just going to share my screen real quick for those that are wondering.
I did think that this was, a pretty good look.
Yeah. So, it's a bit mixed. I guess the 3-point change is certainly weighted a little bit more red. High-low percentage change was important as well. The follow-through closes have been generally negative, but that hasn't always been the case here. If we look back since September of last year, we're pretty much equally balanced, negative and positive. But prior to that, history said it would be generally fairly red.
Yeah.
I don't know. That means that we're probably going to be seeing a pretty ugly finish to the rest of this week, which is very possible. Again, on this week with CPI, what a response in the markets by the CPI data. And then now the FOMC, what a response, a bit tempered, a bit mixed. And then we have the FOMC coming up. This is a heck of a week too, because we also have like FTX. Yeah, I know you don't want to talk about too much.
No, I do now. I mean, what I've been calling for finally happened, so I'm happy he got arrested. They, as I put in there, I don't think he'll have another free breath for a long time.
Good, send him away forever, man.
Yeah, they refused to give him. He was trying to get released to house arrest, and luckily they didn't. And sounds, although I doubt it, I did put that thing up. I think you probably saw. There's only really one jail in the Bahamas, and it's considered to be one of the worst in the world. But to me, he's probably at some provincial holding tank, by himself, because he spent a lot of money there. So
that too, but the United States has him as a high priority target. So the
US he says he's going to fight extradition. But yeah, it's been the last 2 days. He was in Congress yesterday. Today, the Senate Banking Committee. Yesterday was the Agriculture Committee. Was it? I forget who yesterday was. But today was the Senate Banking Committee. No, it was Financial Service Committee yesterday because Maxine Walters. This guy was a thief. The thing that amazed me, did you hear Kevin O'Leary today?
Yeah.
Double down, triple down. This guy's insane. The guy stole billions, and he's trying to play it off that now it's CZ that did this and Binance, just real craziness.
So can we talk about that really quick? Because one of the things that I definitely want to talk about was the FUD that's going around Binance, right? We had the issues with the outflow, and then CZ had to give updates. CZ's obviously been trolling a bit online. And then today, Kevin O'Leary had some pretty strong words relative to CZ and CZ's actions, he named Binance, but it's really, he was directing it towards CZ, right? So can you just give an update on that?
That's not a public company.
Yeah.
It's by entry. Yeah. So a couple of things. So number one, let's talk about the Binance FUD, so to speak. And none of it's really FUD. It's just being put out of context. So yes, there was about $3 billion in outflows. That's the money leaving the exchange. And that's sort of what led to the downfall of FTX, right? It was about the same figure. So people started putting out these things. The difference
24 hours, by the way.
Yeah, in a 24-hour period, $3 billion in, removals, that sort of started the end for FTX. The difference is that Binance does about $80 billion a day in trading, where FTX did about 10 or less. So, you got to think about it in the relative of things. I sent you that graph that showed you that it was just a little blip on their screen. Whereas on FTX is when you took that 10 billion out, it was huge. You take 10 billion out of Binance, there's another 70 billion in there. And then we've also seen, there was all kinds of rumors that all the market makers were leaving jump left FTX just before all the, what hit the fan. Did they have inside information here? But the same time that they pulled out, and they made it clear that what they did was just within their normal trading. They were done with whatever they were doing on Binance, and they were moving the money someplace else to do something else with it.
Right.
And at the same time, Wintermute put like 600 million in, which is the largest market maker now left in the system. So, it's just a lot of false information out there. Be careful on Twitter. There just is. There's a lot of people that want to call for the downfall. There's a lot of Bitcoin maximalists who hate any central entities. They're going to use anything they can right now to continue to point that narrative out. Nothing that happened with FTX was a failure within crypto. The guy was a thief. Bernie Madoff did it in a very regulated market, right? Enron was an extremely regulated entity. The 2008 happened, the Lehman moment. Those things all happened within regulated entities. The problem is if you have a thief and the guy no one said Sam Bankman-Fried was stupid, right? He has degrees from MIT and Stanford, considered to be really smart. The thing we didn't know is that he was using it to become a criminal, not to, better mankind.
Like he presented himself as you.
Right. Absolutely. Well, and that's, hey, that he's done he's as much damage as he's done to crypto. He's done as much damage to that whole movement of altruism too. Because people are pointing out that he's not the only person who has fallen by the wayside by thinking that as long as I'm giving back some of what I make, then my excesses and my faults aren't really faults. Right. So that's taken a hit. But
okay, so how do you feel about, so there was a separate issue, right? And it kind of like all bled into it, where there was two specific influencers that have a very big following. You know who I'm talking about, that pointed out that went on this, like, they were pissed because through their fault of these API keys, their accounts basically got scammed.
Okay, that's with Binance. So and that's the bit of problem with all exchanges. And there's where there needs to be consumer protection. It's what my nonprofit works on, making some smart regulations. What you're talking about is a couple of very wealthy, crypto influencers, Twitter guys, had APIs, some of their, basically the way that they connect into Binance, or allow another entity to connect with their account at Binance was hacked. And they are mad because Binance has a recovery fund that they put together after the failure of Luna and FTX and these others for sort of situations like this. But of course, like any other insurance fund, they don't want to pay out. So they're saying that this was the fault of the customer or the fault of the third party that controlled the API keys, that all the, everything worked right on our side. You know what I mean? In other words, somebody, whether it was you or somebody else, it showed us the proper credentials to pull your money out. But it's a huge amount of money. And then where CZ probably really hurt himself. And as you know, I'm not a big fan of CZ, is, he showed his true colors, and he basically canceled the guy's account and said, F you, go trade somewhere else.
He did.
This guy had legitimate concerns, questions, and wanted to know. You said you put together a fund in case people got hacked or something happened. I'm saying that I did, and I've talked to your people, and this guy did the mistake of sharing the internal messages that were sent to him by Binance support and things like that. And they didn't look good. And as opposed to just saying, you know what, let's all calm down and let's calm our heads prevail. CZ said, guess what? I am still King Kong in this jungle, and you can go play in another playground because this one's mine. I'm taking my ball and going home.
Hey, getting back to FTX, there's a breaking tweet that just came out. A GitHub account bearing the name of a former FTX executive authored code that hid Alameda's ballooning liabilities. Bloomberg is reporting right now. Wow.
Well, I mean, they did say that. I mean, that keep in mind. I mean, I don't know about the GitHub part, but they made it very clear, and they've already pointed to that Singh gentleman. I forget his name, that he programmed supposedly the back door for Alameda. Yeah.
Oh, Gary.
They had Gary Singh.
So I don't know. I mean, he was one of the executives for sure, and he was the most tech savvy.
Longer the two that are credited with being the coders behind FTX.
Right.
But again, I'm going to tell you this. Sam Bankman-Fried, when asked that question, said, "Well, I don't have the ability to code." No, you just directed two people to do it. And remember, Caroline Ellison already ratted them out to the rest of the company because she said that the following people knew about it, and those people were, both Wang, Singh, herself, and Sam Bankman-Fried. So, she already had done that. And there are a lot of rumors. She's been here in DC. She hired probably the most high-powered law firm that there is, former enforcement director of the SEC crypto crimes unit.
Wait, and she's in DC?
Yeah. Oh, yeah.
There were a lot of people saying she was running to Dubai.
No. Yeah. Then they said they found she's been all over. Someone found her in New York at a thing about a week ago. So she's here. That's why they think she's gone state's evidence, because they think there's been sightings of her here in the U.S. Now, I don't know if that's, if she's really here or not. I do know that she hired the law firm here in D.C. again that had a former assistant district attorney for the Southern New York, which is who's prosecuting them. And then the second lawyer she hired from that same firm used to be the SEC's director of enforcement for crypto.
Yeah, all these charges are levied in relation to FTX.
Yes, FTX so far. He's the only one. So, all could have flipped. Believe me, someone's going to flip on him, in my opinion. So
they haven't already.
Yeah, I think they did. I mean, the other part that people, some people have gotten upset that it took this long, it took, long for this to happen. Bernie Madoff was arrested in a day or something. The difference was Bernie Madoff admitted to what he did. He confessed to his kids, who then turned him into the FBI. And when they said, "Can you explain what your kid said?" he said, "No, I'm a fraud." So they arrested him. I mean, that, the opposite is Sam Bankman-Fried saying, maybe I was forgetful. Maybe I didn't do this correctly. A billion here, a billion there. I thought that was my piggy bank. I didn't realize it was your money. I mean, that's literally what he's doing. I mean, it sounds like, my girlfriend has a 2-year-old daughter, and it sounded like her, when I say, "Did you just spill the milk over there?" It wasn't me. Oh, really? So it's just you, me, and the dogs.
It's a tough day for, obviously crypto going through, like, it's really just a lot of negative news in the markets. And, you always like, especially during the grilling yesterday, the FTX CEO, every single politician follow with, "I don't get crypto. I don't understand this. I don't see a need for this." So, I mean, now we're at this point, right, with all this news and obviously fear from the FOMC, perhaps. Maybe that's why they're disappointment. I should say fear. I should say disappointment, right, from the FOMC. Where does that leave us? Well, for me, in relation to what I would be looking at in the markets, let me just share this very quickly here. So if I was to look into the SPY right now, right, I think the breakout zone is close. I really like the fact and the idea that we may have that potential here to really work up somewhere through this 411 half price, right? And then it's that fast pop to that 420, Howard, 420. And then there's these little baby gap fills that we could be working towards, which is really at that peak of that huge, midsummer move that we saw. And the markets are trying, but, the problem now is that since we've gotten into like this zone, right, once the market has gotten above 390, it's been this mishmash of back and forth trading. There was a big, like, how do I say this? Like, upside propellant where we basically jumped, pulled back aggressively, and then popped again. And now we're just kind of really chopping it back and forth, having really big volatile swings up and huge retracements and big pops and confusing sideways movement, then all of a sudden big drops coming back in. That tells me, in my opinion, that this is a very important level in the markets, and that the break could lead to that range extension and that fast range extension to these pricing levels. And the SPY has gotten above that 200-day moving average, which is what that teal line is. The last time we tried to rally, we actually bricked right there and it rolled us to 52-week lows. The question is, are we going to be able to maintain that level? And so far, we haven't. And so now, if we look at the Qs here, the Qs has yet to even power through that 200-day simple moving average. They've actually been stalling out the 100 SMA. And I ultimately know that when stocks, or at least how I feel, is that once stocks start recovering above key technical levels and holding above them, they'll eventually work their way up. And it's like, well, we'll eventually see perhaps the NASDAQ try and work their way above that 100-day moving average and then kind of fight it out in between that 100-day and 200-day moving average. And then the breakout occurs above that level. So we're getting to this point where, pricing levels are getting really important. It seems that it's the 4,100 level in the SPX. Let me pull up the comp here, which is the NASDAQ. It's the 4,100 level in the S&P 500, and it's like the 11,500 level in the NASDAQ. So, I don't know, guys. I mean, we look at the Dow Jones. Dow Jones has been pretty darn strong. They're very top heavy. They're struggling to get through that 35,000 range. And then we look at the Russell, where the Russell has been getting a little bit weaker. It's actually started to, quote unquote, channel down a bit off of these highs. We're going to really need to see that break here through like 18 and probably like 1889 to like 1900 to really break free and try and get back to that 2000 level to test. And I mean, we break free in the Russell. We historically know that when the Russell gets going, everything gets going. So that's going to be super duper important here in the near term.
For those that don't know, what makes up the Russell?
Just a bunch. It's a bunch of small cap stocks. It's usually in relation. It's you would say growth, right? And growth under high interest rate environments generally don't perform well. Growth performs well under bullish environments, right? And that's kind of why we say when the Russell gets going, when growth stocks are growing up, that's just going to kind of be that trickle down effect. When they're the leaders, it's a very dynamic and bullish market. The Russell has thousands of stocks in it. You'll see a lot of names in the Russell that are also in like the NASDAQ 100. They'll be in like the small cap, mid cap, S&P 500. We always just automatically assume the NASDAQ only has 100 stocks, but they have thousands of stocks. If you look at penny stocks, they're generally NASDAQ-based stocks as well. So it's an interesting prospect. And it doesn't surprise me that the Russell is struggling here a bit. But if the Russell and the Dow continues to try and lead, and the NASDAQ is finally successful in breaking free and breaking out, then we know for a fact that we have some really good upside in the near term that we could recover through. But if we look at the Russell on the hourly chart, I mean, that's by the way, this indicator was taught to me by this crypto legend in this podcast with me, the linear regression 100. It's been a very consistent layer. And you could see that right here at this midpoint, which is always an extremely important, prospect, it's viewed bullish. It's viewed bullish above this linear regression mean and bearish underneath. It tends to slide pretty quickly once it gets under and loses. And then it pops once it starts to recover. So I'd like to see it hold. I'd like to see it reverse. We really need to break through this 1890 pricing level. Once we start skewing and making higher highs and higher lows, that linear regression will start tilting back to the upside and getting bullish again. So if we look back now at the Qs as well, you can see that the linear regression is really sideways. It's really flat and really not showcasing a trend. SPY is actually showcasing a very slight tilt up in relation as well. And again, you could see where the SPY had fought really hard to get above that pricing level. And look at the 2 times, right? When the S&P 500 gets above this level, look at the 2 times at what the reaction of the market has been. And so maintaining above this linear regression mean level is super important and is actually part of the process of what we need in this market to remain bullish. As you could see, the trend in the Dow in terms of the linear regression tilt is much more tilted to the upside than the SPY, where the NASDAQ was completely sideways and the Russell was tilted down. So, you know, we'll see how this all plays out. We need the Russell to just maintain and hold. We need the SPY and the Qs to maintain and hold. And if we have that thesis, then we know how the market wants to trade and where the market wants to move and wants to move to the upper threshold of that linear regression level. And at that point, I mean, that's a hell of a return, Howard. Hopefully we have that. Just don't know if that's going to be the case.
That definitely is what we all want for sure. You know, it definitely.
And thank you for teaching me that indicator, by the way.
No problem, buddy. I've been using your price channels a lot lately.
Yeah, man. Price channels are good for trends, brother.
Yeah, you know, shows you where the next spot is.
I just, you know, it's the process of information and guidance that's being utilized that really does help kind of provide that picture. And Howard and I kind of have, I guess, the knowledge, but the knowledge is really just looking at charts and recognizing things and, you know, understanding the indicators provides the utility that gives us the context to, you know, perhaps go long or go short. And if you ever wonder why we look at these indicators, it's because they do tell us a story. They do provide information. They provide a lot of texture for someone like myself. And texture, context, information, these are all important because one thing Howard knows is that I am an aggressive trader. I am a risk taker, but I am disciplined to cut my losses when I need to. You know, like lately, when I'm wrong, I'm very wrong. There's been no doubt. Tesla, Airbnb, and AMD. I've had no shot in those names, but Lulu, SQ so far, NVIDIA, well, we'll have to wait and see. NVIDIA was up like 3 points for us. Then the market swung. We'll see if it recovers. But, you know, that's just kind of the history with my trading lately. It's just been back and forth. My day trading has been great, folks. Biotechs have been breaking out, Howard. I don't know why.
Maybe there's weight. I have a couple of buddies who they buy these biotechs. You know, they'll buy these ones that they're in the business. They sort of know about it. They'll buy things that you never heard of and just wait 2 years until the trials are done. And then all of a sudden they just, you know, I mean, one of them had Saba back in the day and just lets that thing go crazy. A couple of other ones like that. That's where, like, people, if you got patience, you know, and you do it, it's just insane.
We've had some clients cash out in Saba. Another one, I had a client. It was funny. We day traded this name a lot. Saba was another day trade in my penny stocks room, and he decided to like actually focus on this company. And he's like, you know what? This company is actually onto something. And this guy ended up putting a lot of money into a company named Tandem Diabetes at around $4 a share. And circle back, I think 5 years afterwards, he sold it for $1 million profit, Howard.
I mean, that's I mean, the guys that I know that do biotech, yeah, the same thing. They put these investments in and they're cashing out for, like, you know, retirement homes, left and right. Like, it's just unbelievable.
You know,
well, you want to talk about having to have, you know, iron hand, diamond hand, whatever you want to say, man, some of them will be down 60, 70, 80%. As they ebb and flow through the, you know, the regulatory process and all that. But they, you know, they do it. What do you think about you see Core's Scientific looks like it got its bailout? You see that?
Who?
Core Scientific, the largest Bitcoin mining company.
No, I didn't see that at all.
Yeah.
Howard, that's your realm, not mine. Sorry,
yeah.
brother. What bailout? What bailout did they get?
Miners, I know. I didn't know. I know that one you never really mentioned. But that's Core, CORZ. They
that's right. You mentioned them.
Yeah, they jumped up today on that news, 22%. They got the bailout they were looking at from somebody. So, yeah.
I see that. Holy cow, they did jump. I have them up at 69% right now.
Yeah, it was when I looked at it earlier, it was 22. Yeah, because
now I see that. So
I hate to say but here's the reason I bring that up is, there's a couple others out there that are teetering on the edge. If you're looking for some YOLOs out there, folks, Argo is very much in the same situation. Riot very much in the situation.
Dude, Howard, you're saying this right now, and this sucker is pumping, dude.
Is it really?
It's up 50% after hours. Guys, so if you're wondering, Core Scientific closed at 25 cents, up 69%, and now they're at 37 cents. They're pumping along here. Here we go.
It's
pumping, dude. What is going on?
Look at Riot and look at ARBK.K, which is Argo.
I got to pull this up. Because
they could be the next sympathy.
CORZ almost hit 40 cents.
That's crazy. And that's the one I remember I kept on sending you the stuff.
Yes.
I never did it. That's what I talked about when I picked the wrong YOLOs. I sent you like 4 articles on them and how I thought that they were going to pull out of this.
Tomorrow's not doing anything. What was the other one you said?
The other one, ARB.K, I think it is, which is Argo. Yeah, Argo blockchain. Because they're
an OTC. Stick with cores, guys. Look at this thing going. It's at 41. It's not stopping.
Look at Riot too. RIOT.
Oh yeah, I mean I track Riot, but
because
I would much rather buy cores right now.
Well, but what I'm saying is cores did this jump because they got a bailout. Riot and Argo are 2 others talking with companies about bailouts. Look at the correlation to what their stock has done recently. If they get the bailout, they're going to go the same way, right?
Dude, this is crazy. They were at 14 cents at 2 o'clock. And now they're at 41 cents. I know some people listen, please do not take this as me. I have no trade in this name. Howard, I hope you don't own anything on CORZ because I'm going to kill the screen share if you do.
No. I don't want us to come off like I don't own any Bitcoin company stock outside of
okay. As long as none of us own this, we could. Otherwise, we're gonna have to start this podcast all over again.
No.
He's gonna be like, you can't have that in there.
I don't own any of those stocks.
Gary, I love you, by the way, man.
Oh wait, no, I just lied. I'm in Coin because I told you because of your
Coin is different.
Yeah.
So let's wrap up with Coin here. I saw news earlier on Coin and SI. Did you see that news?
I did not see that one. I do want to say before we wrap up, I do have one thing that I want to bring to you. PayPal partnered with MetaMask. Did you see that?
Yes.
Okay. I do think that is a huge deal. And the reason is I've talked about this on this podcast before and talked about it in my room a lot, is the next level of adoption needed to come for Web3 and for DeFi for the integration of apps like PayPal that people already use. The frontward facing, customer facing, good interface, easy to use, has rules, regulations, and governance behind them. Public company. Now they're going to start getting into the world of DeFi or allowing people to get into the world of DeFi. I do think that's huge.
Yeah, the PayPal MetaMask thing is pretty interesting. For one, it opens up PayPal into the NFT world as well. So they get that exposure. And I'm a big fan of PayPal in the long run. Elliott Group, the hedge fund, agrees with me because they position themselves in PayPal. I actually like fintech in the long run, but that's just me personally. Because I just, you go from a guy who used to always carry cash to not carrying cash anymore. And that's pretty much because of fintech and the usability and the utility of like using your phone for payments and stuff and waving a card in the air, and all of a sudden it's like, there you go. It just makes things so much easier. It's hard for me to carry around big old, wads of cash in my wallet or in my pocket anyways. I never feel comfortable. As a poker player, I always kept it double wrapped and tight in my backpack, and I always carried a bag with me. Actually, that's another thing I've just recently stopped doing, was carrying a bag around with me. I've always been one of those guys that did, but lately I haven't. Yeah, so there's some positive news, right? That PayPal MetaMask partnership, this Coinbase news with SI, which I thought was really
building. That's what I sort of wanted to get across, is that while it's been all doom and gloom this week, is there are still building. We're moving in the right direction that way in crypto. So I just wanted to get that part across, because it's been pretty negative across the board. All this fighting between the Bitcoin maximalists, the different exchanges, all that. Just wanted to point out that there are some good things going on. We're getting some bailouts, like I said, from you saw Coors, which was a big player, so now maybe the Bitcoin miners won't capitulate as much. They'll have the funding they need. We're seeing people get interested in that. Was interesting. They sort of did call out Coors for not managing their portfolio correctly. They said they sold every Bitcoin basically at a loss.
What?
Yeah, of course. They held their Bitcoin so long that they basically sold for a net loss, as opposed to how much they paid them. It cost them to mine it.
That's messed up.
Yeah, really bad management there too.
Hope everybody enjoyed enjoy the podcast today, guys and gals. If you like what you heard, you're intrigued, you have some questions, you want us to post up some charts, do us a favor, comment down below. Don't forget to like this video, subscribe if you haven't already, share with others. This podcast is available to whatever site that you use to listen to your podcast. Guys and gals, with the great Howard Greenberg, Charles Moon, and we're saying we are out until next time.
See you guys later.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.